Great, we're all good to go. Okay, I have looked at these markets in detail, so let's share with you what I'm seeing. Okay, so we had monthly jobs last Friday, we've got inflation this week, and so what I have been doing at the moment is I've been shorting oil. I'll just show you my account actually. These are a few screenshots I've taken, I'm not finished doing them yet. So I just shorted the oil at the highs here. So you see all that resistance up there. So that was my entry point. Rang my stop down, I've just taken it off before I came in the room actually. So nice little profit there on that sell. And seeing as it's sort of range bound anyway, I've just taken off a trade there just for a little snip at the markets. And you can see what have I got? I've got some other trades up here as well. What was this? This was a short on the S&Ps today. Couple hundred quid on there at the point in which I did that screenshot. Anyway, so you can see, and what have been these very nice drop off in the oil last week. The figures for demand for oil have been showing an increasingly weak demand. So the demand supply equation has completely shifted. Prices at the pumps are deemed to be way too high, hence the reason why people are backing off. So it's a good opportunity once these markets break down, particularly if we broke the structure on Wednesday. Any highs are to be sold with the potential, I think, obviously there's huge support here at 87.30. If we break this, then I think next stop is going to be potentially 80. Of course, if we hold here, then we are potentially marching up to 90, 95. 90 is, I would say, is the mean average for oil at the moment, but even that is historically quite a high number. You can see even through 2021, as we were recovering from lockdowns in 2021, this was all the way down to 62. So obviously the wars pushed this up and changed the whole science of oil at the moment, or the chart science of oil anyway. So like I said, I think these highs are still shortable, and because if we do crack that bottom, then I think we're going to get another big leg down. So let's have a look at the dollar, because we've got US inflation this week. So I'm going to be focused on, why is that not moving to the dollar? I know, because I'm not clicking on the dollar. There we go. We have an inverted curve on the bond yields between the 5 and 10 years. Historically, that is a sign of recession. We saw good job numbers last week, but you know, if you trade what you see in these markets, then you can, we'll look at the indices in a minute, then obviously at the moment these markets are struggling. If this dollar continues to drift lower, particularly after we've had inflation this week, then I think that gives the US markets a light relief. That also gives commodities in general the potential to push up, because the relationship with commodities is historically weak dollar, then divergent, so weak dollar, strong commodities, and vice versa. But with the indices, a weak dollar gives the chance of the US indices to breathe as well. Okay, so as we stand at the moment, let's go through the indices. So we've hit, even today, we've hit this major resistance point up here. We've hit the drop zone from the 9th of June. So we've come from a high of 33,100, close to 800 at the moment. So if we can't sustain these highs, then we could become as easily as low as 33,300, or, and of course, if we crack that, then we're lower. So at the moment, I'm still looking for a push to the upside on the basis that we have a 1, 2, 3 wave push. At the moment, we're getting a 1, 2, and potential 3 wave correction, assuming that we stay in this range. If we stay in this range and these dips get bought, I think we can push up through here and get up to 34,000. My target for the Dow as we're getting towards end of August and September is 34,000. That, I'm going to scrub that if we start closing underneath these levels here, because then we are potentially just going to obviously tip down back into towards 31. All right, so it's at the moment, yeah, nice an impulse pullback, directional wave. Now we've hit a resistance point even in today's market, and we are pulling back into this support. That goes for the other markets as well. It's been recorded, guys, so if you missed the beginning, no need to fear. So again, impulse, pullback, directional, pullback, and then another leg up. But you can see we've wound up into very close to this trend line, this long-term 2022 trend line. That is coming in from the January highs, the April breakdown. In fact, let me just tidy that up a little bit. And now today's 8th of August high. So every time we touch this trend line, it weakens. So we've touched the trend line and it's been rejected. If we then pull back and have another run up at it, I think this will crack. But if we stay underneath this trend line and start closing lower, then obviously we are going to drift back to, this is the NASDAQ, by the way, on the daily chart. We're going to come and see 12,200, and we are going to crash through that if we don't sustain these highs. Let's have a look at the UK. FTSE. FTSE at the moment is very resilient. So here we have Mr. Bailey, the Bank of England, saying that the UK recession is inevitable. And here we are still holding the highs. So again, if we close underneath this 7,400, we're toast, we're done. If you can see that was an important level on the 10th of June. So if we crack under this level here, then we are going to tumble right back to these lows and more. If we can hold this range, then I think we can make our way back up to 7,600, potentially 7,700. Path of least resistance. At the moment, I'd have to say, given the stocks that I'm looking at and observing, I'd have to say the path of least resistance is still up. I still think we can reclaim these June highs and maybe more. But I will completely flip that sentiment if we close underneath 74.40. All right, so the jury is out, and we're right on the line. We're right in this zone. But if we hold that, I think we can push up. S&Ps, well, same story. We've hit some resistance and suffering, and we look as if we would short term want to come lower. And if we break that, then much lower. But I'm still looking for this 3rd of August range to hold and push up. Right, now, oil is still trickling lower. Gold. I've got some interesting markets for you to look at. I'm going to go bang on about commodities again, because I think commodities are fantastic, and I'm not going to stop banging on about them, because if you're not in commodities in an inflation-ridden environment that we've got at the moment, then you are going to miss out. Gold. We are struggling here. I would very, very much like a deeper pullback. What I'm hoping for on US inflation, I would very much like to see US inflation show a dip to enable this one to lose its footing, and for me to buy 1750 area on a pullback. So I'm looking for this to get up to 1815 and beyond. 1850, to get back to 1850 and pop up out of 1850. Okay, so this is a really nice leg up we've had from a low of 1680. If we can, so I would need a pullback again into when Thursdays. We popped up on Thursday from 1760. I was sitting with some orders lower down which didn't get filled, so I need a dip in this one to get me in on another pullback and push up. I'm into, I have got positions, you could argue I got positions in gold because I am involved in miners, and we'll come on to that in a minute. Right, NASDAQ has pushed up off the lows since we've come on air. So anyway, let's push on. I'm going to go right, okay, let me gather some speed. I'm going to go right through some commodities. It's these softs, what's called softs, the grains. We've recently seen, we've seen a high in the beans of 1757. This to me is a corrective pattern. We've had a, let me get this pattern, I hope this tool is going to work for me. I think this is a 1, 2, 3 wave corrective pattern. So we are already building, I think, in the next wave up on these. There is a gap down there on 1346. So if we can get that gap filled, I mean, I am already buying pullbacks on wheat and corn. I think this is wheat. I think the corrective pattern is over and done with. I'm looking for this to push up. Now you can buy these. You can trade these on ETFs, Wisdom Tree, and the other such like ETFs. I'm actually buying them in dollar-denominated ETFs because of the strong dollar and the weak pound. Again, I would change that if the dollar falls off the edge. There are other ways you can trade that. We'll talk, if we've got time, I'll go over that again. There are commodity-related stocks that you can get involved with. You can get involved in some of the potash companies and so on. Corn. Again, we've got a gap up in corn. 580 is the gap fill in the corn. If we see 580 in that one, I will be buying back into this. Right, let's look at gas. I'm looking for a full C wave correction in gas down to 60. Not sure we're going to get it. We've got all this support in front of it at 70, 75. So if we come down to these levels here and hold, I will be a buyer. Otherwise, I'd like a full move back towards this big breakout on July And then I'm going to look to see if we can get up to these levels up here and ultimately up to this extension level up here. All right, so we talked about this in 2020, way before this kicked off. I was suggesting in no uncertain terms that you should be in on this, but there's still time. Still time if we can push up. Now let's have a quick look at copper before we move on. I'm going to get straight into stocks. Copper is a bellwether for the housing market and a general bellwether market proxy for the overall market. So copper screamed up to these highs, pulled right back to 69.60, and is trying to hold, but it's coming up on volume. So if this copper is sustainable, which I believe it is, I think next stop is 84.40. And again, that potentially leads me to believe there is still scope in the equity markets, particularly the US, for some further upside. Right, let's have a look at commodities. Let's have a look at miners, sorry. Yeah, oil is still weak and the NASDAQ has been pushing up. Right, let's look at miners first. We'll look at UK miners first. Pan-African building off this 1840s, still plenty of time to get in this. I think 20, yeah, we're only 2080. I'm looking to see if we can get back to 24.25 plus on this one. If we stay above this breakout pattern, then I think we can recover 28.40 and ultimately 32 is achievable if we can keep closing higher and ultimately hold above 25. So I'm in this, the volume is picking up. I believe there is much more room, much more scope for the upside. Hochschild, I've been calling this one as well. I think Hochschild is seeing volume, we're seeing higher closes. This is a huge level off of this big drop in November 21. So I think this is viable. If you get a 79 with a stop underneath that most recent low, 71. And Griffin's not doing it. The volumes, okay, I don't like Griffin. I'm not in Griffin anyway. Sylvania, this is platinum, is that right, Andy? I think even this one looks higher. It's a scrappy chart. If you're patient, you may see a deeper pullback. Otherwise, yeah. Anissa, we normally talk for about 45 minutes. So I didn't see that question, sorry. Silver and copper, yeah, definitely talking about silver and copper. Great. Welcome everybody, by the way. Still low numbers because of the holidays, but anyway. Let's go to sentiment. So wow, it's a very sweet move. This is what I'm looking for in Pan-African. Very nice move off the support on SEY sentiment. We looked a little bit vulnerable here early July, but we're right back to some resistance levels. If that pulls back to 85, 87, which it may well do, at the moment that's a strong move into resistance. But I think that can get back to 105 and potentially, if we get a run on this, I think we could see 120, 130. And if you look at some US miners, see these, a silver miner. This is pushing up really nicely. HL, beginning to see more volume. Any pullback to 450 on that one. Could see that go back to higher number. Right, let's look at banks. Start shouting out what you want me to look at. I'm going to just go through the sectors. I'm in Barclays, and that if we can crack 170, you can see we're right at trendline resistance today, but we're up on volume. We'll keep closing higher. Ultimately, I think we could see 220, 240 this year if we can get above this 180. And Lloyd's, yeah, looking good. Any pullbacks to 44? We're only 45 and a half, 45 and a bit. So if we get any little minor shakeout in the markets, I think this is still good for a pullback. But look at these patterns. You know, you're seeing a lot of these patterns in some of the good stocks. I'm just been avoiding the riskier stocks this last 6 to 9 months in general, not entirely, but in general. HSBC, lovely big push up on the first. At the moment, all pullbacks are getting bought on this one. If we can close above or stay above 550, I think we could see 570 plus. Volumes have been tailing off on it, but it's looking good. It's a tougher chart to call on the basis that we've got a lot of localized resistance here. If we start closing lower, then this may tumble over. Whoops. I mean, if you're in this and this one starts closing underneath, well, the obvious one is this 510, 515. If we can't sustain this and start closing on 515, then I would, if I were you, I'd consider getting out. I'm not going to tell you whether you should be in or out of these. I'm just talking about what I'm seeing in the charts. You bought into, okay, let's look at these then. Investment trusts. I'll come to that in a second. Let me just keep going on these. Legal and general, financial sector, holding up on volume. And AJ Bell, SIP broker, holding up with not particularly great volume, so be careful of that one. Standard Chartered, volume seems to be increasing on Standard Chartered, and Pru, a diversified investment. And yeah, I like. I did a big report on Pru with one of the big brokers a few weeks ago, and this. I think this is going to go back to 1144 plus. These pullbacks are getting bought. So if we can sustain above 1060, it's a slow mover. You know, this is not. If you're looking for excitement, which you shouldn't be in this market, but if you are looking for excitement, this is not for you. This is a slow burn. But nonetheless, I think this is a good company with a good balance sheet. Right, what else have I got? Right, let's look at these investment trusts before I look at the next sector. BRWM, mining, World Mining Trust, BlackRock. Looks good. It's hit a resistance level, but that looks good. So we've had a 2022 high of 797. So as long as we can sustain these levels, we're higher. If we start closing under 570, be careful. If we start closing under 550, you might want to consider jumping ship. But on the face of it, that looks good. It's coming up on volume. So I'm with you on that one. JLEN. Environmental assets. Ooh. Wow, what a decent chart. Continuing, wow. All little minor dips are bought, and we are in breakout territory. So we've held the main structural support in here late July. Continue to close higher. What's your target on this one, Andy? Let me just play with some. So we've broken extension levels. Let me do a. Take a look at that level. So we're already hitting 133, 145 looks like the next one. Dividend of 5% as well, right? Well, once things break out, it's very hard to suggest where to get in, unless this looks it's got a gap up for 125. Yeah, keep an eye on that one. That looks very good. Right, moving on. Let's have a look at retail. And let's look at Sainsbury's. Beginning to pick up. I'm not trading this sector as a whole. If that Sainsbury's can close above 220, I think that's got further to go. Tesco. Very similar pattern. So ever since we hit 240, 247, volumes on Tesco are not great. Very unimpressed with the volume, but it is holding support. Be careful if that closes under 250. DFS, this would have been a bear rating target for me. Shoe is a bear rating target. Right, I'm getting ready to short this now. I would sell signal. New recent high on the 4th, engulfing bar on the 5th. I would love to short 195 if I get the chance, and my stop will be above these highs. Because if we break down here, then, excuse me, I think this could start to peel back to some of these support levels. Okay, so this is a good short candidate for me. And Card Factory. I've taken a couple of big chunks out on the short side on this one. I'm not going to touch this if this doesn't recover to 63, 64. I would consider shorting it if we got up to 55, 56 here. Well, I'm going to concentrate on something like shoe zone at the moment. ABF, Primark. Ever since they announced online, it's had a push up. It's not for me, but it does look as if we can close above 1675, 1680, I think I can go higher. We're certainly above this breakout pattern. Airlines, IAG. I hate these stocks. Well, I hate them from the bottom. Well, from a buyer's point of view, I think these are open targets. If these hit resistance levels, it was a good short up here. There's a breakdown there. Even that was a short from that level there. Anyway, I still think these are shortable. If I was going to short this one, where would I short it? If I was going to short this, I would try and get up here, 140, 150. Yeah, there's the main drop zone. In the meantime, I mean, this is attempting to pull up. Obviously, got a lot of well-documented problems. I wouldn't touch it. I think if you want to buy stocks, there's much better volumes out there. Otherwise, steer clear. EasyJet, really struggling. Not for me. Chewy is attempting recovery. It's got volume. I mean, that looks as if that could get to 167 plus. Not for me. Boo and ASOS, and then we'll move on. Boo. Big push up on the third. We're holding. Volumes are rubbish. Be careful. ASOS. The volumes are rubbish. Highs are selling. I would steer clear. Has it got any upside? Yeah. I mean, if we are, these lows have seen some upside. If we close above 11, I think we could see some recovery, potentially up to 15, 16. So, I mean, there is something in there, but I wouldn't buy it unless that proved itself and got a higher close. The sectors that are working are commodity related, banking, and IT. I mean, if you look at this, I missed this one. This was on my watch list and I missed it. I was stalking it, and by the time I decided to get in it, it was too late. It just flew. As a buyout. Great brand. This is AVG. Avast. What a miss. That's the miss of the year. So we already saw. I just like the way it was holding these light. It's a good product, good company, good balance sheet. I like the way it was holding that support at 480, but I just delayed and missed out. IQE, it's been on a little run and now dipping. I would leave it. It's got a lot of support at 40. This is a more risky stock. SEE. I've seen some volume down here. This is a potential growth stock. But just, and I do like the spike in volumes down here on SEE. I mean, it has been as high as 12. So if you want a speculative stock, this could be for you. If you're prepared to risk some capital on a dip in that one, right? Quick look at housing. A very quick look at housing. Struggling. Persimmon. Big dividend payer like Persimmon. It's struggling. Barrett Developments struggling. Taylor Woodrow. Guess what? Struggling. So this is these are, if these housing stocks can't pick up, what chance is there on the rest of the market? It's right. I'm taking a lot of times. We're going to whiz through this. Energy, BP. Pullbacks are getting bought. Shell. Oil, let's look at JKP. I've not looked at this one for a while. JKP, this looks good. Volume has picked up recently. Higher close off of this support, 214. I like this one. But I think this is worth a shot. If you're going to get into this one, try and wait for a pullback at, say, 215. Get out if it starts closing under £2, because otherwise that looks good. Tullow has picked up from this 39. Volumes have been better. You may pick up 48 if you're patient. Otherwise, you may have to buy higher if you want to go into that. PFC, I think this Petrofact is going to pick up. They won some new contracts recently. I think this one could go back to 160 plus. So I think that's viable if you see 110, 112. Get out if that starts failing and breaking down. And let's move. Oh, your SQZ has had a pullback recently. Volumes are dropping off. I would leave it. I would concentrate on PwC and GKP if you're interested in this sector. Basic materials. Have a quick look at. I like this one. I think this Elementis Chemicals Company. You see a pullback to 110. Volumes are not brilliant, but it is a small stock. TPI cap. That's if you see 125. I wouldn't chase the market, but that's nice. It's very range bound, so that's why I wouldn't chase the market. And Rio, I like Rio here. Volumes are picking up. If you get a chance to buy 48.90, I would get into that General. Okay, I haven't looked at General for ages. About time I looked at General. Got Fresnillo in this. I shouldn't have. Right. What do I want to look at? Let's look at healthcare. GSK. If we stalk this one, because I think if we close above 1670, I'd be a buyer. Otherwise, I wouldn't touch it. It's in a nice range up here. It may want a deeper pullback, but otherwise, I think that is a good one. AstraZeneca dividend on Thursday, right? Again, that looks lower short term. But a pullback into 103 looks good. I like these US stocks. Medtronic, picking up on volume. Bristol Myers, that is sitting on a decent support level. Right, let me look at General. Right, any other stocks you want to look at? Yeah. Oil pipeline, is that correct? It's got the ex-BP Mr. Brown, isn't it? Sitting in the chair still. They had a decent volume on Friday. You may well see a lower number, 125, 129. May pull back into this pink zone. It's been on a decent run from 120 to 150. So this is potentially, if this is an impulse wave, This is potentially the pullback before you get the direction. I'm not saying that's definitely going to 185. That's just a scenario. So if this holds here, then I would suggest general is an option. Informer, which I like. I think it had an upgrade recently, didn't it? Very range-bound stock. But I think if I was going to get into Informer, I would want to dip back into this 19th July level. I would ideally want to buy somewhere around there. You may not get a chance to do that. I would leave it. If it closes high, you may have to pay a higher price if you want to get in it. Volumes are not brilliant, so you may get a chance to get a decent pullback, 550, 545, if you are patient. Right, I'm done. Let's look at a few more. No, before I'm done, I'm going to look at some more US stocks. I'm going to look at some of the bellwethers in the US. And the Cecil, I'll look at yours, since you joined the Cecil, I'll look at a couple of yours as well. Amex, I mean, blimey, if Amex can't do it, then who can? Well, it's certainly in this difficult environment. It's got volume. Looks to me as if Amex could come higher. Coca-Cola, range bound, but dips are buyable. We've been looking at healthcare. Let's look at J&J, Johnson & Johnson, lower, but lows are potentially buyable. Look at Walmart. Yuck. This is why I don't like retailers, because of what these guys are doing. Let's look at Goldman's. That looks higher. If that pulls back to 325, I think that could get up to these highs. It's had a good little run down from this 280. And Apple. That looks viable at 156, struggling up there. Let's look at Meta. Yeah. I think I'd be a buyer of Facebook. I'd be a buyer of this Meta if we hold up here. I think that's got, I like the volume. We've had a very nice bar on the third. I think I'm gonna bid at 163 on Meta. I'll mark that in there. I think that's buyable. Primarily, one of the things if that volume holds up, then I think that we can at least see push back into these April highs, I think. Right, let's. We didn't look at Vodafone. Let's look at Verizon. Nice move on Friday into jobs. Oh, it's been really shot to bits, really, isn't it? It looks as if it's recoverable, but I'd be very wary of stocks that got that much red on them. Got a couple of big legs down on this one. Right, I'll look at that. That's a US stock, is it? BLDR, okay. I'm just going to cut across to a couple of stocks that I'm looking at with Cecil. Yeah, the HIMX needs to hold these levels today, but I think it's promising. If we can hold that level, I think we could potentially march back up to 830. The big copper miner looks as if that can work up. I think FCX is a pullback at 2970. Uranium CTJ holding up nicely. The gap down there at 2340. MU chipmaker has had a run into 65.15. I think that might see 59.20. I'm a buyer of chip manufacturers. Right, we're going to look at Andy's BLDR. Builders first source. Wow, it's already, but that's a good healthy run on volume. Lifeblood of the market, volume. So we hit those lows. Big sell into 16th. Big push on the 1st of July. Are you in this, Andy? I would like to see that fall back. No. I would be very patient with that. I'd want to see at least 66.70 because it's got a lot of resistance up, resistance up there. If I was going to buy it, I would just stalk this and wait for it to potentially come back to 65. If it didn't and started running off, I just leave it. My message to you is don't chase the markets. Just don't chase. So there's a lot of resistance up there. It's got a problem with 74, but I do think that's worth stalking. Right, I've been talking for quite a while. Any other stocks you want me to look at? Let's go back and see where we are on these current markets. Nasdaq's fallen back again. It's really struggling with this resistance up here, and the oil is back up to 89.50. So the oil is definitely looking to hold here. I think I need, as a day trader, I need to watch out for a pullback into this area here, which I've talked about in the room, my trading room. Right. That's it. I've got nothing else to show you at the moment. Let's have a look at the spiders. So all these markets have hit the buffers a bit. Volume's looking good in this spiders. The gold has held up well. I do wish gold would have a decent pullback. Okay, so to sum up, as we are at the moment, these markets are sustainable on these levels. If you're in the right sector, I'm avoiding anything with too much exposure to the consumer. I'm attracted to stocks that are commodity related and bank related and technology, but I'm avoiding and healthcare. These are my stable sectors. But sectors I'm avoiding is overexposure to or even minimal exposure to the consumer, particularly the lower end of the consumer market. Your budget airlines, for example, these are all vulnerable, particularly as time goes on. Maybe not so much now as the cost of living crisis starts to really bite into these companies. So I'm expecting further upside this month into next month. I think, I mean, in the big picture terms, I think certainly the US will avoid a recession this year. But I think even the US is going to get dragged into recession next year. More on that as time unfolds. I will be putting on some specific events to talk about how to exist, how to maintain your wealth in this market, and how to cope with inflation as time goes on. Right. Thanks for your attention. I will, if you're not, I think you're all in the Telegram chat room. If not, let me know. I'll be posting the recording for this to those who missed the beginning and those who missed it. Have a good week. Thanks very much, guys, and I'll talk to you soon. Thanks. Bye.